Hello friends, welcome to my YouTube channel Simply Stocks, and today I bring to you the best picks for this decade, some of the mid caps and large caps, five of them mixed together that you can buy after the decline that has taken place in the market, and they are available at decent valuations. So these have some of the stocks you might be knowing it, and some of the stocks you might think that why it is in the portfolio or in this list. So you can definitely leave a comment. I also have a list of some stocks that missed out on these five, and that will be right at the end of this presentation. So kindly go through the presentation completely. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these five companies, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, once you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk or a portfolio you're having, or you want to discuss with me, you can directly email me and we can work things out with a fee. And for detailed market or company talk, you can contact me on if you cannot pay on Patreon, you can join me on YouTube as well, and you get all the benefits of Patreon. Now the criteria for these companies, these are established brands that yet strong management. They are market leaders in their space with low debt, without any pledging or any corporate issue. Return ratios and numbers are very solid. So all in all, they all have very good, you can say, balance sheet and numbers. So that's why I'm not discussing numbers here, but I'll discuss companies and their moat and what lies ahead for them. So allocation, in my opinion, you should put no more than 10% and less than 10% into these companies. Probably you can add more companies which is in the list at the end of this presentation, and probably have 8-10 companies in here. But put less than 10% into these companies. Hold for the next 5-7 years. It should give you at least 18 to 20% CAGR. And people do ask me, and a lot of questions being asked as to which are the companies which could be bought from a 8-10 year point of view when I do live sessions. So this is one of the presentations for them. And keep a 30% stop loss from your final buy price, average buy price, because if that is happening, then there is something seriously wrong with these companies, because normally they don't fall that much from the top even. The first in this list, and yes, this is interesting. I have put Map My India in here. It's just a 7,000 crore market cap company. Not to say that all the companies would be smaller, but Map My India, in my opinion, it is a leader in its in the GPS provider. It is a leading GPS provider for corporates, and they have mapped nearly 80-85% of India with all nooks and corners and going to villages, etc. So it's very easy by getting there, you can say, paid services for companies like Zomato, Swiggy, etc., even Indian Railways and so on and so forth, to provide navigation services for their you can say drivers, for their employees, etc. So very good company, has 80% of the market share, probably has all the clientele that is available here in India. The only thing is that the IPO came at a very huge premium. It was extremely expensive. The stock has fallen from the top. Once one can start accumulating from here, it is not a 7-8 thousand crore market cap company. It will become big over the next 7-10 years. Again, these are stocks to hold over the next 6-7-8 years. These are not stocks to probably trade into or buy for 1 or 2 years. For the next 2-3 years, things could be up and down, and these stocks could underperform. So very decent company. There's a longevity of business. This kind of business will only gain momentum as more and more people use navigation, and navigation will be there in cars, etc. And it's going to be big going forward here in India, which it is not at the moment. So consistent growth expected. It has corrected more than 20% from the top. Can correct another 10-15%, I don't know, but one can start accumulating here. The second is in the list is my erstwhile favorites, and this is a stock I have been accumulating for the last 1.5 years at all levels, and whenever I have some spare money. And this is Asian Paints. It is a leader in the paint segments and boasts of nearly 30% market share. In fact, it is said that every second house that is painted is Asian Paints, so nearly 40% market share they have. But I'm sure that they have more than 30% market share in India. There's strong management. There's no issue with the management or return ratios. In fact, if you go back into the pandemic times, this is one company that raised, you can say, salaries for their employees. The only company that probably I know that did it in the listed space. Apart, because if you understand at that point of time, say in 2021, early part of 21 and middle of 2021 calendar year, there were many companies doing retrenchment and doing, you can say, reducing their workforce, etc. But Asian Paints were increasing salaries. So the numbers have been top class. Yes, there will be pressure because of oil prices, and that is where one needs to just jump in and take the benefit of it and buy into the stock. Absolutely low debt, no pledging. Large investors, when they come back, will buy into companies like Asian Paints, Infosys, etc. And it has been gaining market share as the smaller players have gone on the wayside. So it has been gaining traction in other segments as well. So one needs to understand that Asian Paints has gone into other segments like sanitizers and the other products that they are producing. And I think they'll gain traction there as well. A little bit of numbers have gone up a little bit over a period of time, but I think over next 8-10 years this is going to remain as leader, and I think going to perform better. Yes, valuations are stretched, but it has come down at least 12-15% from the top. So these are decent levels to get in. Probably on declines to 3000 you can buy more. 3000 2900, I don't see more decline from there on in. So one of the best companies to hold. The third in my list here is Titan. Now, Titan is a very interesting because a large investor, a large, you can say, HNI investor, individual investor, which has been a big bull of the market, has reduced stake or paid stake into this company and has been doing that. It doesn't mean that the company is shutting down or the company is not going to produce the numbers which is desired by retail investors. I believe that going forward, 17 to 20% CAGR returns from the stock is very much possible, and it has been performing well. The management has been performing well for over 10 years. There's high institutional investors in here, and once things normalize you will see what will happen. So next wedding season, probably from October onwards, big numbers will kick in, and I think the move in Titan could begin as early as May June, just before that, because the investors are very savvy, and they understand what lies ahead. So before the results of say December, the stock would be much higher from where it is currently. I think these are very good levels to buy. 6 to 8 months target for me here is closer to 2900 to 3000, but I think over next 8-10 years it will continue to be a market leader and perform. Yes, returns could be up and down, but over that period I think 18 to 20% very much expected. And one more thing I want to add here is that these kind of market leaders do not go away, and they will save you in distress times like we have had over the last 4 months. So as I explained, these kind of companies will always save you in very difficult times, like time of war that we are having, or very difficult like the pandemic, etc. These are the companies that come back very quickly, Asian Paints and Pidilite and Titan types. So these two companies need to be in your portfolio, whatever portfolio you're building, so that it will save you and safeguard you on difficult occasions. So it should be a front runner. It should do extremely well from the September to March season this year. So one can accumulate over the next 6 months on any declines and at current levels in the market. Fourth in my list is another small cap, a smaller company, 1800 crores, 1900 crore market cap company, Acrysil. It is a fast growing, you can say, kitchen appliance company, kitchen accessories that they provide and other kinds of home improvement products. And it is doing extremely well in a competitive market. Remember, it is corrected from the top, it's around 700 rupees or so, from a high of, I think, 930, 940. It has corrected decently, 25-30%, but not a lot to say that there is something wrong with the company. So it is corrected just in the sweet region of 25-30%, as we say it. Very good management was talking of 500 crores of sales for FY23, I think. And in that regard, we could be looking at a market cap of 2000 to 2500 crores in a year's time. I think there's a good 40% upside in a year's time, and probably over the next 10 years this could be big. Yes, I know it has moved up something like 6 7x from the lows, but many companies have done that. But this Acrysil is coming out with very decent numbers continuously. There's strong institutional investment in here, strong investments from large HNIs, and I think once things open up, there's a lot of traction that is expected from, say, the June quarter onwards. I think, as we understand that government norms are about to get lifted on the pandemic, so things will look much better from from April onwards. So June and September quarter will be big, and then we'll have the festive season. So these are the times to accumulate a Crisil. At 850, 900 people will be running to buy it, but these are the times to probably start buying into it. And finally, in this list is the pharma company. Yes, I know there is no IT company. I'll explain that. But Divi's Lab Pharmaceutical has been out of order, out of shape. We are looking at hospital companies being bruised and battered. Look at Dr. Lal, etc. But these are the times to buy into those companies. Again, Divi's has come out with very good Q3 numbers, quite exceptional Q3 numbers compared to other pharmaceutical companies, and yet the stock is at the same level that it was trading at before the numbers. Very attractive levels to buy. One of the leading pharma API firm. It gained market share in the last few quarters, and it is very visible that they gained market share over that period. There's high promoter and institutional holding, and it is a high return ratio stock, strong management. The management has been delivering for the last at least 6 7 years, as I name it. So even if the pharmaceutical industry did not perform well continuously, the stock has done extremely well, and we have seen that this has been one of the biggest wealth creators over the last 2 decades. Could continue to do that. It will give you a lot of cushion in your portfolio, along with, say, an Asian Paints and Titan. So this is one that you should be having in this portfolio. So three stocks which would cushion your portfolio, two stocks which could really, when they perform, they'll perform extremely well. Stocks like Crisil and MapMy India. I think this is one of the best portfolio you could be having, but add more stocks to it. It's not that you just buy these five companies and that's it. You can add the other companies that I'll discuss in the next slide. Another point I want to make here is about the IT companies, which I'll make when I do the next slide. Okay. So some other champions which could be part of your portfolios are Pidilite Industry, which I have talked about many times. So I have not put this into this list of five because I wanted to give you some other perspectives of some other stocks that could be part of a long-term portfolio. Bajaj Finance and Finserv, the Bajaj twins, it could be part of it. The reason I didn't pick it because I am not very savvy with the financial companies, and I'm not very, you can say towards financial companies to be part of it, because banking index and financial index really is volatile compared to consumer centric companies. Dmart could be part of your portfolio, but again, Dmart is expensive even after falling say 30%. It could be traded, but from a long term point of view, I still feel Dmart is expensive. So there could be a chance that over a period of time, if they miss a couple of numbers, it may fall a lot. And now two IT picks, TCS, Tech Mahindra could be there. I did not pick IT because IT has run up a lot over the last 18 months. There have been a lot of news lot of numbers that are baked into the price already, I still feel there is more downside left in most of the IT companies over the next 6, 8, 10 months. So I don't think that over this 1 year period, I don't think the prices are right to buy in this period. Probably 20% down from here on these companies would be better. Not a TCS probably, but mid cap IT and all, and that's what where I will look at. But yes, one can accumulate TCS say at 3500, 3600. Tech Mahindra can go down 8, 10% more, and that's where one can accumulate. I did not pick IT because I feel we could end up having a 2, 3 year of dry run in IT after the kind of move we have already seen. And Nestle India is an erstwhile favorites of everyone. One can definitely accumulate. The results were okay, not very strong, and that's why the stock has corrected. I think around 16,500 or so. Very good levels to accumulate below 17,000 levels. So this is also one of the stocks that could be part of your portfolio. So this one video on five stocks that could be gems over the next 8, 10 years can be built in into your portfolio. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.